Hello, this is Cryptolyze. I hope you are well on this Monday, October 9, 2023. We meet today to talk crypto, to talk BTC, to talk macro. See what this week has in store for us, and it starts right away. As a reminder, you still have the 60-hour educational course training, which is available for free, in which you can learn trading, technical analysis, investment, everything related to blockchain and cryptocurrency through 130 videos and more than 400 pages of guides. So everything you need to train yourself, directly available for free. I'll put the link in the comments and description. Simply register and use our partner's platform to finance the training. In comments and descriptions, and we attack straight away with Friendtech, who tell us that they have made 20 million since their launch in August. So it is certainly one of the protocols which is the most profitable in the short term for developers. There is no need to delude ourselves. It is clearly one of the protocols which has broken all records, especially in the bear market, in which we clearly have a valuation which is enormous for the developers, not for the users. And this is where it reminds us that the system of Ponzi works very, very well, especially for those at the top, and in particular the developers who built the platform, who systematically take fees. As a reminder of what Friendtech is, it's quite simple. It's a system that looks a lot like Twitter, except that we added a marketing layer which is very strong. That is to say that each user can cut out their own name into tokens and in fact sell its own name directly to its users so that they can have access to information. Private, namely that it is used on layer 2 base of Coinbase. We move forward in the news with Tom Emmer, who is trying to maneuver to become finally to replace the person who got blown up at the Senate level, in which he would like to become precisely the leadership at the U.S. House level. And what's interesting to see is it really good for crypto? It's noted like that in the block. But you have to understand that there are two types of truly pro-crypto people. There are those who are pro-regulation, who want to impose regulation on cryptocurrency, and who do not want to let the SEC do what they are doing now. And those who are really pro-crypto, in which they want to value BTC, etc. Well, in this case, I think that Tom Emmer is not pro-crypto, but really pro-regulation, because that's what he's doing. He is the one who notably carries some of the laws on cryptocurrency. That could be a good thing. It would allow us to move forward quickly on the subject of laws without necessarily having to wait for stricter regulations. So we could at least have an acceleration on this side, and if we have a legislative framework which is much more imposed, that implies an end to the actions of the SEC, and especially behind a legal framework in which crypto companies will be able to develop, will be able to build their business, and that is what we expect in all cases. Speaking of companies, we still have FTX, which is on trial, and here it is, the SBF trial, which started a few days ago last week. And there we are starting to have information coming back, some quite interesting things, particularly on their process to falsify the number of cryptos they own. So it's very interesting to see how they carried it out, how they camouflaged it, and we can ask ourselves questions of how that could have been audited. Clearly, I think it would have been very complicated to determine it. And the interview that we are really waiting for is that of Caroline Ellison, who is the CEO of Alameda, which is really the approach of SBF. And it is with it that they constructed what happened, the loss of the $8 billion, and namely that Alameda, which was a company specialized in trading, drew directly from FTX funds. This is what we had already seen. And now it will be interesting to see in what way it's been done. Normally, it's this week we should still have a lot of information on FTX and the functioning of the fraud that took place. We also have other little things for this week, even which are quite heavy. We are going to have the Fed minute on Wednesday 11, and especially on Thursday 12, we're going to have the CPI for September. That will be really monitoring. We see a small forecast drop, which is in the process of having, I think we should have a stabilization, not necessarily a drop, but a stabilization. And the month of October, in fact, have a drop. And why a drop? Because quite simply, we have oil which fell at the end of these times, and especially at the beginning of October. Afterwards, we see a very nice rebound with a gap which has formed. This gap is mainly linked to current events. Hamas has carried out a large-scale attack on Israel. This large-scale attack led to a very strong reaction from Israel and the United States. And the United States, which is sending back its largest carriers to intervene in the region. We know that we have Iran, which supports Hamas. So we really have the Israel-Iran confrontation, which is strengthening Therefore, inevitably tensions which are being created. And when we have tensions, we have a very high valuation of oil and assets of this style, which are also very impacted because it is there. Region of oil production, even if we are still relatively from Saudi Arabia. We know that there was a rapprochement between Saudi Arabia and Israel. We see that it was completely shattered because of the intervention of Hamas. The question will be, are we going to have bullish continuity with here a break of the retest at 87 minus 87? So we're going to say $88. Or are we going to just have a little retest to have a bearish quantity and get what we had defined? 77. There we have a market reaction to the news that is currently being made. We will wait to have the delay, particularly today with the opening of the American market. How will it react? On this, we could very well have a huge green candle which will even directly break the $95, or here a time delay which will fill the gap, and then we will retest the 81 to potentially go a little lower. So it's interesting to see, especially since we are in a context where oil really has a very strong impact. I invite you to watch the video I made on Saturday where I really explain why oil is going to be decisive for everything that will happen in the next 2 years. Next to it, we have the TTL, which are the representation of the American Treasury bonds, which are still in the process of collapsing. We have broken the support that we had for some time. We are heading here towards the next support, which is really low, in which we would arrive in the 82, or even potentially break the 80. So that is to say, break the lowest since 2004. And there, that would really hurt for the bonds, and especially critical for the banks. American. Namely that we have GBTC, which for its part continues to push slowly, quietly into its corner and has outperformed BTC. So which is at the same time normal because we are in the process of simply making the discount disappear. We were in a discount which was relatively low. There we redirect ourselves and we go back until Grayscale becomes an ETF. And so behind, there is no longer this problem of premium and discount at the level of Grayscale shares, but the people are in just buying GBTC because there is an interest in potentially having a discount of 10-15% on your BTC, something which is currently being priced. Afterwards, we must not deceive ourselves. If we ever have GBTC, which becomes an ETF, I think that we will have a large part of the people who will precisely exit of GBTC, in which we risk having a small sell-off at the level of the BTC of GBTC of the ETF. Because until now, we cannot sell the BTC, which are in the trust, on the other hand, if it becomes an ETF. And indeed, we will be able to sell the BTC, which are in the trust. Each share which will be destroyed will have the equivalent in BTC, which will be sold on the market. So inevitably, we will have a downward pressure, which could be put in place on the release of Grayscale. But on the other hand, at level of BTC, we see that we are rather still in this approach here of retesting the support of 25.0, very nice rebound that we had. We are in the process of retesting the middle of the range if we consider that we have a range from 31.0 to 25.0, which is what we have been evolving into for some time. Despite the bad news from the macroeconomy, because if we look at the SPF 500, we see that we are in an effective three-step retracement. Despite this very strong retracement that we had, BTC absolutely did not move, which is rather positive. And there, precisely at the level of the SP 500, what we could think of is to really go and do this retest of the 4,400, and then afterwards we will have to see the reaction of the American market to the news that we have seen on the tensions in the Middle East, which is always an area of tension, but which is in the process of asserting itself. So we will see the reaction of the U.S. market to that, especially since we have behind the inflation figures which fall this week. It is certain that it will be scrutinized by the Fed. There is always this fear of a continuation of increase, and in particular, we had an article from the Figaro, I posted it on my Twitter, where one of the members of the Fed told us that we will certainly increase rates. Yes, we know that there are members who think that we are going to increase the rates, and that is just the type of communication that really interests me. It is that we are in the process of increasing by saying, but in fact, we are going to increase rates. While, yes, there are 2-3 members who want to increase the rates, but that's not how it happens. It's a vote of the commission which determines whether or not we increase the rates. So for me, we need to take a little step back from that. Whether we're going to stay in the plateau or increase rates, it's still too early to determine. And I think even they don't know yet. In terms of short-term, very short-term BTC, we have been grinding. So quite simply over this weekend with a price which is relatively flat, we will have to be patient. Always when we have this, it is to create liquidity to make an upward or downward movement. We didn't have any movement on Sunday evening or this morning, which is strange. Usually we always have a really strong Asian movement before the opening of the American market. This is not the case there. So this means that it will be worn by the Americans this week, and it will be very interesting to see it. Because in any case, in all cases, we see that we have a lot of difficulty creating liquidity. If we compare here the movements that we have had since the beginning of October, we see that we are really having difficulty building liquidity in these areas. We have a little bit of long liquidity, which is there, but which remains relatively weak up to overall 26,400. Whereas when we create movements here, we see that we immediately create very strong liquidity in up and down, and we have the capacity to be able to get it quickly, which is not the case. Currently, we can clearly see that we have difficulty creating liquidity, whether at the top or bottom. And that shows that we really have a lack of interest in BTC here because we are going to look for other assets, as I have already explained many times. Another interesting point is that the large liquidity clusters currently are present in short here between 40,000 and 42,000. So really a large margin. When we see the acceleration here, it is more or less empty. So we would really have to go very, very high, very hard to do a short squeeze, which is very complicated when we see the liquidity on the other hand. Long liquidity is always good present here, although I think that the 25,000 will still hold until we have news that is strong enough to allow them to be broken. And besides, when we look at the market a little bit, I will even end on it. What will be interesting to see will mainly be open interest, which shows the ability of people to hedge against different positions. And what is interesting to see is that people, the more we evolve over time, that is to say, we will look in October, we are at 27,000. We will look in November, 27,000. We're going to look at 26,000 in December. We're going to look even a little further in June at 27,000. Overall, people are pricing the possibility of having a range that will remain for a certain time. The volumes are still relatively low, although we are still already at 600 million hedges already carried out because the price of options, the more we are in advance and we take them in advance, the less expensive it is, the less we pay the expensive quotation. And therefore, it is a form of hedging which is really very strong on the fact that the market remains flat and in which we have a level of minimizing money and people are hedged about it. And it's interesting, we will certainly elaborate on it in tomorrow's daily newspaper because it is a very strong signal of what is happening at the level of the markets and the big players. Clearly, we are waiting for the news. We are waiting for regulatory news, news from the SEC, news from ETFs, generally everything that revolves around crypto. I hope you liked this video. If so, don't forget to leave me a like and a comment. It always makes me very happy. And we meet at 13:30 to talk about SOL, Solana's crypto,